What's up, everyone? This is Chris Hendricks. So today we'll be looking at basically a bunch of cryptocurrencies and synthetic indices. So we hardly post indices. So today I just wanna share basically my knowledge with these pairs and stuff. So um, today's platform is gonna be TradingView. So that is what I'm gonna use. uh, TradingView implementation. This one has things like synthetic indices and stuff. So that is what is good about this one. So the first thing we're gonna look at cryptocurrencies, right? So I took a screenshot of Bitcoin, I think, over the weekend. Yeah, it was so basically it was a inverse head and shoulders. As you can see, this is the left shoulder, the head, and the right shoulder, right? And the price was basically within these areas of the shoulders, and I was anticipating a buy, right? So this is what we have currently, and as you can see, the price has been buying ever since that area of the shoulders. So we're expecting cryptocurrency to recover from the huge downfall that it's been experiencing in the past. I don't know how long, but we're expecting this to go up for, I don't know how much it's gonna go up by, but if you see any flags, uh, what I mean by flags is the patterns, these bullish patterns. Once you see these, again within the bullish run, you can execute your buys and stuff. So that is what I see with Bitcoin, and Ethereum kind of like correlate, so they go hand in hand, which means you're gonna see that the charts are a bit similar. So this is Ethereum, and it almost looks like an exact copy of Bitcoin, but there are differences in levels. As you can see, these shoulders, they are not symmetrical, which means the levels kind of differ. You can see this one went a bit deep, instead of like just bouncing off the shoulder level basically. So you need to watch out for that, but then the same applies bullish patterns or bullish flags, and you take that to the upside. Let me just get my arrow, and as you can see, it broke out this down this descending structure, and it's still climbing up to the upside. So that is what I see with cryptocurrencies, and but then basically just Bitcoin and Ethereum, because cryptocurrency is a huge variety of currencies. So basically that is what I saw with Bitcoin and Ethereum, and we're gonna move on to synthetic indices. So I was running a bit of time. I was running out of time, so basically I'm just gonna showcase one synthetic index, which is volatility 100 index, and so basically you can see we have we kind of had a huge run off to the downside, and now we are having more or less of a correction, but then the market could just turn and recover to the upside. So we're gonna trade within this channel or correction. As you can see, it is quite going sideways. And as you can see, we kind of having this inverted in shoulders as well, but this one is quite huge, so it might not play out, or so we need to be quite careful with this one. But then trading within the correction itself is rather safe for like quick entries, short-term trades basically. So the market kind of turned at the resistance right here, and now it's been going to the downside. So basically we are gonna draw a structure, and as you can see, this is my support, and counting the number of touches on the support is just 2. So first touch, second touch, and now we're anticipating the third one on this head and shoulders formation in like bigger time frames. So basically we are expecting movements like this, and then this touch will be considered as the third touch to this support, and that is when we are going to start looking to go to the upside. And this is not for disclaimers, this is really not certain, it's just predictions and stuff. So anything could happen with the market, as you guys should know by now. So we are gonna trade only if such things happen, so we need to look out. So basically what supports my analysis to the downside right now, to these areas, is this huge impulse to the downside, and followed by a nice correctional flag. As you can see, this is the basics of our trading strategy. So basically we had a huge impulse, now correction, and as you know, the correction is followed by a continuation of an impulse. So basically it's a short-term downtrend, right, to these areas. These are, I think this is some kind of pink color. So basically that is what we are looking at, and drawing our structure of the correction. You can see we had, if I zoom in, you can see we had basically a textbook example of a correction or a flag. So basically we had a series of 3 touches. Let me point that out with these arrows. So we had the first one there, second one there, and the third one with a significant rejection. So basically if you were trading rejections, this was your signal to sell. This huge rejection there, and now we're having a sell-off. So basically if this does go away, and since we missed this rejection here for an entry, we could for a safe one, we could wait for the market to basically break this support right there, and then retest on it by creating, even if it's not perfect, but some type of correction right there to confirm that it has broken this support. So that will be our second entry, because if we enter where it is right now, the market could basically go back up and get influenced by this double top right here, and then continue going where it was going traditionally. So that is what we are waiting for with this one, but then we need to watch this carefully because this is the 30 minutes time frame. It's probably going to happen within the next hours, so please do keep an eye on this one. And that is it for today's video. It was just a quick overview of cryptocurrency trades with the synthetic indices. So thank you very much. This was Chris Hendricks.
Get rid of her, run a fire down in Panama. Talk a movie, but on cinema. No taste, no cameras. No taste, no cameras. I'm back in the studio. Damn, you know I'm so froggy, yo. Damn, you know how they teddy, yo. Numbers and moving, big daddy, yo. Diamonds be dancing on my teeth. You know I'm fresh, boy. Yeah. Ain't nobody gonna